Is the yield curve inversion predicting a recession in the US? Well, according to some experts, the last time it inverted, it took about a year and a half before any meaningful impact occurred. So they think any recession or any economic impact as a result of this inversion might take some time. It's still some time off, it's still way off, and so given all of those sort of things, one can say the fact that certain things happened in a certain way in the past, or trying to rely on what has happened before isn't always a given. It's not always granted that things will pan out the way they happened before, because we are in very different times of late. So we also know that the 10-year yields is now up 2.5% of late, but the tech stocks that are usually affected, they are usually affected negatively whenever we have this sort of move. They have they have responded in reverse. You can see that. This is the Nasdaq, for instance. This is where most of the tech stocks are traded, especially the major ones. You can see it is up. The Nasdaq is up 13.48% since when? Since the 14th of March. Since the 14th of March, it is up 13.48%, and then we of late, today, this week, the FOMC minutes are coming out. They're coming out, and basically it provides more detailed information on the range of committee members' views on the appropriate policy stance on the US economic outlook and on the near-term policy inclination. So market participants and everybody indeed will be able to deduce, deduce what sort of rate increases that may occur. So moving on, we can see also that the 530 spread on the yield curve, at some point it printed up down to 0.98, and right now it is down 12% or 0.12%. It's down 0.12%, or inverted by 0.12%. This is the 530 yield curve. So basically, a 530 yield curve means this is the 5-year treasuries, and then the 30 is 30-year treasury. The difference between when you subtract this from that, you get that spread. So you can obviously see that it's a negative. I think it's 0.14 or 0.12 or thereabouts. So that's what I'm talking about there. So that's the spread. It has inverted negatively. So, and then the 510, the 5-year, this and this, that is the difference between this and this, is also a negative. You subtract this from this, it will give you a negative. That's also inverted as well. So, and then in addition to all of these things, we have also seen that given all of these inversions we are seeing, and we also know at the same time that 25% of all the stocks that are in this Russell 2000 index are small cap financial stocks, and so far the Russell is also looking positive as well. So far it's looking positive. It has cooled off from this high of 2,133 as of the 29th of March, just not long ago. But it's still looking positive, above all of its 10, 20 or 50-day moving averages. The short and intermediate moving averages on this. This is the daily chart, I believe. Yes, the daily chart. So it has improved on it. It's positive. So given all of these things, you should expect this negative inversions we're seeing or yield inversions we're seeing to affect the Russell, but it hasn't happened. So a lot of market participants and experts are wondering why this hasn't happened. This is all in the line, or this is all in line with the point I'm trying to make. What you and I know before does not mean that it's not granted, it's not given, it wouldn't always occur again. That is what we're seeing right now. Things have changed, things are changing. What was yesterday isn't exactly what is today. That's what we're all witnessing. This case of the Russell remaining positive given the yield inversions, and also the fact that the 10-year yields is now up about 2.5%, but the Nasdaq is still up, doing the reverse. You should normally expect the reverse to be the case, but it's no longer the case. So this is all that has been going on. These are some of the observations we have picked up, and we just felt that it's important to know some of these things. Times are changing. What used to be the case before are no longer the case. What used to be the case before is no longer the case. So I'll continue to update you, and thank you very much for watching this video.